Hello, everyone. All right. Well, you're the second person. Did anyone get an email today? No. No one got an email. Okay. All right. I'm working on it, folks. 50% of the population of what, Rochelle? What did I say? Oh, did I say, did you guys get the email?
All right. Oh, only 160 people. What's going on, Matt? Did Deanna send out the email?
I sent her a message. Yeah, she's sending one.
Okay. Let me just put on YouTube. It's funny, I could see you on YouTube and I could see and I on switch to 1080. All right, let me say hello to everybody here. Armulfo, Philip, Devin, Jesse, how are you guys? Armulfo received the email. All right. Go live. I could say hello. Ooh, your camera looks fantastic, Matt.
Thank you.
You better on Zoom, actually. Okay. Just came in. Thank you, Penny. Thank you. Thank you. Thank you. Kevin. Hello there, Kevin. David. Ken. Good afternoon. Good afternoon. Today, VIP is about to begin was cheese. Not good. Can you post what Penny just said? Here, I'm doing it. I'll post it to. Let me make her a little note here.
Marvin, we're in Ponte Vedra. This is just south of Jacksonville.
All right. Cyrus, Rochelle. I think we're in the 21st century, Rochelle. I don't,
You
Kathy,
missed the context.
I always do. At least I don't miss the context with the stock market. Hey, Jesse. Uh, Adam, how are you? Hey, Matt. All emails came out to me and notices. Okay, good, Adam. Good. Robert, Joe, Brendan, Terry. Dan. And if I miss somebody, I apologize. Just want to say hi to everybody. Jason, Gus, Sue. Good, 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 Penny. Gurdeep, Brett, Pamela, Wes, Philip, iPhone, Rochelle, David, Tara, Stephen, Jill, Rachel. Hello there, Rachel. Every time I see Rachel, I think about my 11-year-old. My 11-year-old, I'll tell you something interesting. She went to see Justin Timberlake with my wife yesterday. It was her first concert ever. And she said she had a really good time morning. So Nathan, David, Teresa, Richard, hello there. Marvin, we're in Ponte Vedra Beach. Leslie, Irogelio. I think I got it right. Nestor. Hey, Nestor. Welcome from UK. Stephen. That's right. Baboom. Oscar. Robert. Uh, got Bob. We got Sean. Good, good, good. Good, Sean. I don't know who you are. Hello from Netherlands, Piet. All right. Holly, Brian, Wade, Celine, Kane. How are you, Kane? Would you give Kane access when you have a chance, please?
Yep.
Thank you, Matt. Daniel, Stewart. Good, good, Stu. Ken, Alan, Cyrus. I'm just waiting for the room to fill up. I'll be starting in literally 30 seconds. JNS says, grew up in Jax, excited to be here. Thank you for being here. Diana. Aaron, good morning. Good morning, good morning, good morning, good morning. Hey, Kane, how are you today?
I'm doing great. How are you guys?
Beautiful, beautiful. How is the weather in sunny California, in Orange County?
It's still great. Mornings are a little chilly. I get in at like 4 something, so it's a little chilly at 4.
Right,
But in
right.
the afternoon, it's mid 70s.
Good, 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 good. Jill, good morning. Ben, Joe, uh, have to. Well, good morning, everybody. I'll just say that. Good morning, good morning, good morning, everybody. Gaston, glad to see you here. Darren, Raj. Looks like a lot more people are coming in with the email coming out. Thanks for getting that taken care of, Matt. Kevin, Carlsbad, what a beautiful place, right?
That's a great place.
That
I,
is a
I grew up in
beautiful.
San Diego, not far
Yeah.
from Carlsbad. Yeah.
Oh, I didn't know that. Yeah, San Diego is nice, Robert. Good, good. Carlsbad's a beautiful place. Don't they have, isn't, tell me if I'm crazy, don't they have like a Legoland there?
Yeah.
Isn't that where
Mhm.
Lego? It is. Okay, okay. See, I'm not crazy. I still remember. I used to take my kids there when they were little. I remember. It's a beautiful place. If you guys have never been to that area, Carlsbad, it is a very, very beautiful place, and I highly recommend everybody visits. Let me share my screen real quick. I'm going to be brief because I want Kane to talk about. He's got some really cool stuff to talk about. While we're getting ready for that, I want you guys to see that we're breaking out on the spy above that level that I drew for you and posted for you, which is really good. Um, very nice. Very cool. Really, Kirk. See, for some reason, I thought you were on the East Coast, Kirk. I had no idea. Brendan, Disneyland. Oh, my. Oh, my. I will say this Disneyland is a lot less crowded most of the time, from my experience, than Disney World. Less people. It's smaller, too, so it's not as big. But both are extremely, extremely fun. All right. So let me talk a little bit about, let me blow up my charts here right real quick. This will just literally take a second. Nice buy orders just coming in. Very nice. The weather definitely, not the taxes. The taxes will get you every time. Come on, connect already, TC2000. Usually I try to connect it, and then by the time I look at it, I'm already like connecting my second one. All right, there we go. Here, I'm sharing my screen, right, Matt?
Mm-hmm.
Jeffrey says, I gained over 2,000 a month worrying about tax bill. People are going to keep arguing with me. Hey, Peter, how are you? All right, so it doesn't matter. It doesn't matter. Ultimately, it is what it is. Hey, Sandeep. All right, so looking at the S&P 500, broadly speaking, right now, you could see we're still very, very close to all-time highs. And I mentioned to you, a lot of people are like, well, we're going to come down. It's too much too fast. That's just not how markets move. Typically, after a big move, they tend to consolidate. Then they decide what they want to do later. It's not a rule that they just go up and down. Sentiment just doesn't change that fast. And Kane, if you feel, I would say the same to Matt, but he never takes me up on my offer. But if you feel like you want to say something, or please feel free.
Okay, will do. Thanks.
I ask Matt to do it every day, but he never. Uh, Here it is. All right. So just to keep today really, really organized, I want to show you the sectors that I'm really focused on right now. First thing is XLF. The financials are breaking out. Now, not only once in a while, Jeffrey, consider it a gift. That's what I consider it, a gift. Anyhow, look, we gapped up on financials, okay? And we held the gap really well. We didn't break the low, and then we consolidated, and we're now breaking higher. That's a really, really good sign. That's a really, really good sign. So I do like the financials quite a bit. I also like the communication sector. If you notice here, same thing, but I mean, we only consolidated for 3 days, and then we broke out higher. That's looking really, really good. And right now, as we speak, you could see that the Nasdaq is starting to grow a little bit, grow a little hair, and starting to move. And obviously the S&P is moving. So we're seeing some movement in discretionary stocks. Now, you might or may not have remembered, I told you guys that this week is going to be a lot. There's going to be a lot of consumer discretionary stocks reporting. So this sector is doing really well right now. I like it. One of the stocks that I'm looking at right now, I'll talk about it later today. Oh, speaking of which, I am doing a class today at 2:30. Matt, do you have a link for that? At 2:30. Not at 1, at 2:30. And I'm not going to give you the same boring stock I gave you yesterday that's already up 10 or 13% on the option. I'm going to give you another one. This one you guys are going to love, okay? Well, not that you didn't like the one from yesterday. What I love about it is it's looking very nice technically right now. Good, Vivek. Good. Glad to hear that. That makes me very happy. Okay. Now, with that said, so I like XLY, I like I like XLF, and I like XLC. I like them a lot, actually. I like them a lot. And this XLC, look, even when the market cooled off a lot more over here, this thing just kept going. You may or may not have noticed Meta is in this sector, and Alphabet, I think Alphabet too. I think so. Yeah, Wild Ranger, the Wild from yesterday is good, but I got another one. I don't want to be lazy and give you the same one today. I'll give you a different one, okay? So, I'm not that bearish on the market. We had a chance to cool off. Momentum levels had a chance to cool off. I showed you this morning. That's what I love about StockFetcher. I can go back in time. Like if I press this button, I go back to how it looked this morning, actually. There we go. That's what we came into today. And on the downside, I think we were at one. Yeah, right here. So we were very, very nice. This is nice. We're not at 600 anymore. This means the market cooled off and allows us to get more momentum. When you see 400, 500, 600, it's that rubber band gets a little stretched. So these numbers are fine, and they're telling us we're very good two-sided market right now. As far as volume is concerned, It's a little bit on the lighter side. Um, I mean, it's kind of obvious that it would start coming off a little bit after election day, but I'm expecting volume, especially over the course of the next 2 months. This line, basically, you don't have to look at these bars. Just look at this line. I'm expecting this line to start ascending and not descending. So far, it's just kind of doing its thing. It's a little too early to tell. I mean, we got 6 days, and even though volume has been lower, it's been on par. So, wouldn't make too much of it right now. As far as bonds are concerned, I told you this, right? I told you this on the 10-year. Now I'm telling you right now, we're keying off of the 8-day EMA. Every time we've been keying off, you could see right here, we tend to just come right back down. Trump is not coming into the White House yet. We still have a couple of months. But remember, the market prices in everything that is known right now, and the market doesn't second guess what people say. Uh, it doesn't think 3 steps ahead like people do. The market just A equals B, cause effect, cause effect. And right now, as I mentioned before, a lot of companies are now saying, hey, we're going to have to do this. We're going to have to do this. We're going to have to do this. They would be irresponsible if they didn't. And again, if President Trump doesn't do that, that's gravy for us. That's bonus, but that's bonus. That'll be something that'll be, the stocks will react afterwards. But as of right now, that is what we're pricing in, and the bond market is not happy about that. And again, that's one of the reasons why consumer staples are not really doing anything. And that's another reason why the US dollar, that's another reason why the US dollar. Let me go to financials. Hey, Rebecca, how are you? What am I doing here? Currencies. That's one of the reasons why the US dollar continues to higher. And as the US dollar continues going higher, in case you weren't there this morning when I was talking, it doesn't mean the US stock market will get weak, but what it will do is it'll put pressure on gold, because when the US dollar goes up, go look at Kane's face, you see? When US dollar goes up, gold, silver go down, and when this goes up, interest rates tend to rise, because interest rate higher 10-year bond is what fuels the US dollar, because if interest rates more expensive in this country, then the dollar will be higher. Like more, you guys understand, this is basic economics. So again, we got to take this into account right now. And yes, if you're a gold trader, please watch the US dollar. And again, just want you to understand that's what's happening. Meanwhile, just want to, and again, I'm going to stop here. I'm going to get into our stocks, but I just want you to think about this for a second. Okay. Think about it for a second. The US dollar is going higher. The 10-year note is going, the yield is increasing in the country, right? And now, with all that said, the Fed is now thinking that the odds of them not taking action next is actually increasing. And if that happens, that's going to drive bonds yield on bonds higher and bonds lower. So again, it's just something to think about, okay? And it's just something to think about right now. Again, this is not this is nothing to do with politics. This is the world we live in right now. Okay, I would not be doing my job if I wouldn't be talking about this. Okay. Yeah, no problem, Vivek. BTC, a crypto stock suggested VIP room. You're welcome. 4 months ago, man. You're welcome. Oh, Cyrus manipulation. I don't know. All right. So stocks that I'm looking at, I'll give you the short side first, and I'll give you the long side, and then I want Kane to talk about it a little bit, to talk about stuff here. So Dollar General, I like the downside. I think it's going to hit the 8-day EMA and break right down. Now, I want to show you guys something, okay? Because I know you guys think that there's some kind of a conspiracy here, and I'm not showing you everything. But here's right 7750, right? Dollar General. So go to our alerts, alert console. Where is it? Dollar General, 77.44 at 9:41 this morning. I set an alert at 77.44 in Dollar General. What am I waiting for right here? I'm waiting for Dollar General to hit the 8-day EMA. Isn't that exactly what I teach you guys? I mean, we're not talking about anything crazy here, okay? All right. So let me give you options on this. I don't have too many. I'll be pretty brief today. Dollar General, December 6th, 75, 68 or 75 Delta, which puts you at 79 or 80 puts. You can go either one of these, 79 or 80, December 6th, Dollar General expiration. Baidu, I bid you 88.37, but again, it may just break down here. This may be a good, it's already breaking down, so you may want to just wait for the VWAP to hit. But again, it's a dealer's choice. I would use a stop loss near the 91.24 level. I would go to the 23 days out, the December 6th, once again, 72 Delta, 89 put. Moondog, good luck to you. Hey, Tebow. Campbell's soup. No soup for me today, right? 50-day moving average. $56, say, stop loss level. I would probably wait for a pullback. This is not a very volatile stock, so an 8-day, common sense here, right? 23 days out, 72 Delta. Oh, too spready. Wow, who saw that coming? I didn't see that one coming. Way too spready. But if you go 30 days out, you can go to the 69 Delta, go 45 days, 45 put, December 13th expiration, and then you don't have to worry about any of that craziness. Kimberly, if there's a will, there's a way. We have soup 30 days out. December 13th. We have soup. Have soup. Who closed Reddit as a swing trade today in the pit, by the way, from yesterday? You don't have to volunteer any extra tickers. You could just tell me Reddit, just curious. No, but nobody took Reddit. Dad did. Yeah, 30 days out. You see, Matt, they hold out on us.
Yep.
They hold out on us. They hold out on us. They don't give us anything. PLD, a little choppy. Now, you see, when you see a compression like this, don't waste your time. You see, here's the problem. If you short around here, you'll have that nice warm and fuzzy feeling because you don't have high volatility. The options will be cheap. The problem is this thing can keep grinding you for the next 2 months like this. But if you wait for it to break down, say to 111.57, then you have a little baboom potential without having to sit and wait. Now, Richard says, I have a question. If you're giving the option now, but then wait for price to hit VWAP, won't the option be different? I'm asking because they only write down the ticker and look for the option. Yes, Richard, it's a great question. And I do, but most people won't do that. Most people are not going to go and go. They're not going to do that, which is why I'm doing that. But yes, you're doing it the right way. Yeah. A, you don't know if it's going to hit. B, you don't know when it's going to hit. C, the option strike price may be completely different by 1 or 2 strikes. Absolutely, 100%. Which is why I tell people 0.70 delta. But then what happens is if I do a stock here and I don't give the option, they're going to say, where's the option? And I'm not going to explain what you just wrote right now because a lot of people will not understand it. Does that make sense to you? Yes, Brendan. Yes. 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 You should always be choosing an option based on the current delta, which is why I'm teaching you to use the delta of the option instead of the strike price. I kind of assumed that was kind of understood, but yes, great question, and absolutely. Yes. John says, for real, even my dumb ass. All right. All right. Hey, listen. It's a good question, you know? So again, I'm just saying that compression. Oh, and if you trade equities, then I mean, it's fine. I mean, you'll tie up your money, but it's not the same as an option. With an option, you need a little more precision. 37 days to go, 67 delta, 120 put. And in this case, this delta will be higher if this goes. I'm actually thinking of that as well. That stock that I'm going to give you guys at 2:30, it's making a high of the day right now. I really wish we had the webinar at 1, but it's going to be at 2:30. But this is a great one. Yeah, it's a great one. You guys are going to love it. Hey, Carlos, are you here? We got Carlos's favorite stock. Remember? I'll never forget it. It went here, and it's true. The thing is, the stock did look like it was going to come up because it's up from here to here. It was like what 40 points or something. But then if you look at the chart, it just keeps going down. I like this stock now. Too. I think it's got more downside. I would put my stop loss like 70 points away from it right now. But again, could do a couple of shares. Shirley says, can you explain why an option spread takes longer to obtain the profit percentage, even if it's learned it faster with straight calls? And don't understand why. Send me an email, Shirley. We'll do a spread here. We'll go a 52 delta, 670 put, and 665. We'll do it for $3 or less. Good, Carlos. Excellent. Excellent. Now we're talking. Okay. Oh, everything I just said about ASML applies to sorry. Cross. Except this one's much cheaper. I would use the 111.78-ish area. I really like this stock quite a bit, actually. If you want to know the truth, probably hit this level, and then start coming down. Good relative weakness too, but below the VWAP the entire day today. 37 days out, 72 delta, 110 put. No, Wilfred, I've never been to the original one, but I may be going to Denmark. And Germany up there this May. And if I do, that would be a very, very cool place to visit, actually. Crocs. Now, interestingly, look, Kane, look at the intraday and look at the daily.
That's beautiful.
That's beautiful.
That's great.
Right. Not the first time we're mentioning it here either. Good, Alan. Good. You got to keep Matt busy, right? If he's not talking, he's got to do something to keep him busy during this session. 112 is a stop loss, about 23 days out. Why are these options so expensive on Crocs? Wow, the implied must be pretty high on these things. All right, we'll go 30 days out, December 13th expiration. You could do the one right here. You can do the 112. Right here, 112. BIIB. Absolutely, Richard. Absolutely. Mentioned this stock several times, explained how they're one of their Alzheimer's drug, huge in China. And if China economy goes kaput, not good for them. Look at the intraday and look at the daily. Right here, 179 is a stop. That's the problem, Ken. It's got high implied volatility, which means you got to really go in the money. Escape that implied volatility that only going on here. That only impacts the out of the money portion. We will go to the December 6th expiration. We will look at the right here. 63 delta, 170 put. This one's weird. And again, I'm just giving you an idea. I'm eyeballing it. You'll have to figure that out when you're doing entry. Now let's just do it to the long side. BAC, Bank of America. Nice Promula. Very nice. Oh, it's PJ. Hey, PJ. Pilates. It's my Pilates teacher right there. Instructor, excuse me. Rich and PJ, if you guys want to hear more about that stock you guys just mentioned, I'm going to talk about it. I'll give you guys some very interesting details about it at 2:30 today. Leave it at that. 43.89. Going to have to look at calls now. $23 days to go. 74 delta. 44 call. Philip Morris, or Altria, excuse me. Nice breakout, nice, and still hugging the 8-day. 52-ish area as a stop. 23 days to go. December 6th, 73 delta, 53 call. See, look, I'm not going to the calls. I'm going to the delta. So when you do this, you start here at the delta, and then you go to the left to the calls or to the puts, whichever. That way, you don't have to worry about the strike price. You start with the delta. Always do the delta, okay? Trust me on this. Do the delta. Yeah, make a song called "Do the Delta." Couple of more, and then we'll give Kane the floor. Aerospace. Very nice looking stock, holding up very well. Had a nice bounce on the VWAP earlier today, taking flight once again. 37 days out. HWM 76 delta, 105 call. When you place the trade, you do this, what I'm doing right now. You go to the delta, go down, and then you go left. December 20th, okay? Waste management. What a beautiful chart. Matt, take a look at this. I know you love your garbage stocks. Am I right?
I do.
I know what I'm talking about here. He loves his garbage stocks. 218.85, but the 15-day would work as a stop here. You go to the delta and do not consider volume and open it. No, not at all, Glenn. I don't. I don't even look at it. I just look at the spread. If the spread is fine, I'm good with it. I don't need any volume or open it. Because that will change. And on ETFs, it's not even real. It's artificial. The market makers, whether the market maker is a good boy or a bad boy or a girl, is going to decide whether it's going to be a good trade, not the. Anyways, waste management, December 20th expiration. 67 delta's fine. You don't have to go 86, kind of deep. 20 right here. 20 call. Last one. Allstate. Some of these stocks look great. And you might have noticed that a lot of the stocks I'm picking today are really high quality S&P stocks, because we have a flight to quality. A lot of folks will start putting money there. Do not see options with. I'm sure somebody will tell you, Paulie. I don't want to go back. I want to give the floor to Kane. Right here, 192-ish, maybe, right, or maybe slightly below, maybe about 190, 140. And we got 37 days to go. 78 delta, 190 call. Right there. Jeffrey says, is there some reason you don't go in the money? Jeffrey, every one I've done, I've gone in the money. Anything 0.50 and lowers out of the money, anything. Didn't we have this discussion yesterday with somebody else who apologized to me this morning, actually? Very nice guy. I don't want to get all worked up today. I'm too I don't have the this is like yesterday. This is like what is it called? Groundhog Day. Matt, Groundhog Day.
Yeah.
Groundhog Day. I am. It's funny. It's funny. No. Deja vu. Right. I have one more for you guys. I really like this one a lot. I like how it's bouncing off the 8-day EMA right now. Upstart. I would go right here, right there, about 58.63. Go to December 6th expiration, 71 delta. Spreads are shit. Excuse my French. 61 right here. 61, but spreads are bad. Spreads are bad. Let's see if we go 30 days out. They're a little better. December 13th, a little bit better. A little bit better. Now, you don't need to, Jeffrey. You could. It's fine. You could, but I think that's just kind of like my minimum 0.70, near 0.70. And I find it works fine. Then it does get a little harder with liquidity because there's just less people who are informed and who do that. But yeah, you could do that. If you got the liquidity, go as deep as you want. You can go to Delta 90. Absolutely fine. All right, let me stop sharing my screen. And I want Kane to tell us what's going on. What have you been up to? Share what's going. Share. You haven't been here since I don't think you've been here since the launch.
Yeah, it's been a little while. But so I've been looking at well, actually a lot. Been getting a lot of feedback. People have been emailing me quite a bit. And one thing that I noticed, and I talked to Roger about this, is how if you have a program, just how those cash flows come in, or the equity curve comes in. And I think that's something that people aren't used to looking at, or they feel it viscerally on a trade by trade basis, but they don't really understand the waves and movements of a equity curve. So that's something that we want to talk about today. One thing that I want everyone to think about, though, is how does Wall Street do it? How do professionals do it? And then how do we do it? And what are the big differences? So there is no fund that I know of that uses a single system when they trade. For example, Roger's got a whole bunch of them. He's got the A-line, he's got the quick strike, he's got stealth, he has a whole bunch of them. And when he looks at those programs, he's actually looking at, but forgive me if I'm wrong, but you're looking at every single one of those. You're not looking at them, oh, this is just quick strike, right? You're looking at all of them all together, correct?
It's all one program for me. Yeah.
Yeah. So what's happening is he's merging those equity curves. And the reason why you do that is because then you have a diversification of strategy. And if you have diversification of strategy, that smooths out your equity curve. The way that Wall Street also does it is if you think about how a fund is structured, the vast majority, there's what is called a waterfall. And basically, you agree up front when someone buys into the fund, they get a disclosure, and you agree to the waterfall. And generally, the waterfall is something like 2% management fee plus a profit share of whatever profits that happen. That's on the hedge fund manager side. So if you give me $100 million to invest, then I take $2 million off the top as my management fee. And then whatever I make for you, if I make 20% for you in the next year, then I get a certain percentage of that 20%. So that's my fee as a manager. So if you think about that, what's that 2%? That 2% is a baseline. It's a guarantee so that I can keep on operating my fund. So my office expenses are covered, people's salaries are covered, things like this. So in other words, when I'm a professional fund manager and I'm running that fund, my fund has a basic income and then it gets a bonus, right? The bonus is dependent on the performance of the fund, but I get that basic income. And as a trader or as a portfolio manager, I compensated the exact same way. So if I'm working for a fund and I'm one of the portfolio managers under the fund, I get my base salary. and then I get a bonus dependent on my performance. And if I'm really high up, then I also get a piece of a percentage of the I don't just get a bonus, I get a percentage of the performance as well. So when you look at your own portfolio, we probably want to do the same thing. And the reason why is because it smooths out that equity curve, your return. So a lot of people, I think, are trading there's two potential problems. First, I'm trading my portfolio and I'm seeing my portfolio go up like this and then down like this, and then up like this, and then down like this. And that can be a little bit of an emotional roller coaster. You get really happy, you get really sad, you get really happy, and then you say, I'm going to give up. I'm never trading again. That's because your equity curve is too volatile. The other problem that could be happening is you're trying to make money and use money from your portfolio. And perhaps if you're retired, then you're more likely to be doing this than if you're not retired. So I've got a certain number of expenses and all my money is in my retirement accounts, and or maybe I'm being forced to, like after a certain age, a lot of retirement accounts require you to take distributions. So I'm being forced to take a distribution out of my account, but if my account isn't growing that same amount, at least every single month, then I'm watching my account shrink and shrink and shrink and shrink and shrink. I'm not sharing my screen yet because I'm just talking right now. So yeah, I'll share my screen in just a moment.
Share just yet. Yeah.
Right. So if you have that problem, then that's we call that eating your seed corn. Basically, you're decreasing the amount of money you have to trade with, which is going to make it even harder for you to make that next month's distribution. And then it's a cycle, a self-destructive cycle where you blow up your account. So one way that we combat that is a diversification of strategies, but especially adding that income component to your pool of strategies. So income component means with a very high reliability and with so basically a very high win rate, I have a predictable amount that is going to come in on a very regular basis. I think income is probably not the best name for it, but we call it that, I think, because you're collecting premium, basically. So let me share my screen. And I'll show you a visual of how that all works. So this is the equity curve of my Gamma Pockets program, starting from the beginning of this year. And you can see that it's pretty good. Overall, obviously, it's an upward trajectory, but you can see that there's times where it dips, and then we have sudden jumps like this, and then you have really sharp dip right there, a really sharp dip right there, and a more extended dip right here, a sharp dip right there, and then a long extended dip over here in October. So and especially if you're used to seeing, if you started out seeing this and then you get a dip, that can be hard to swallow sometimes, because the tendency for people is, oh my gosh, it keeps on winning, I'm going to win forever. And then you experience that one loss. So this is why your allocation size is so important. You don't want to see a program go on a winning streak and go, oh my God, this thing just keeps on winning. It has 100% win rate over the last, I think Rogers does. He's won like 23, 24 in a row in one of the programs, I think. And then you go, the next one, it can't lose. And then suddenly you 10x or 20x, or you put in your entire account on one trade, and that one's the loser, right? That's how people blow up their account. So you want this steady income component, and this is an example of a program that I have but have not released to people yet, of a steady, you see how linear that is, just kind of straight up. Yes, it still loses every once in a while, but for the most part it's very, very linear. And so what happens when you combine these two? This has a very predictable upward movement. And so it'll fill in any of those dips that happen in the other one that's more volatile. And basically what it does is it makes it so you average the two, and it makes it look a lot more similar to this, so a lot more linear. So if we took those two programs and lay them on top of each other, then you get this. So let me compare that side by side to the original. So okay. And then I'll show you this one as well. Oops. Oh, that's interesting. I didn't know I could do that.
Do you guys understand? Do you guys understand what's going on here? He's taking two. Remember, I always tell you how the more systems you have, the less your equity curve will go like this, and the more your equity curve will go like this, and the more your equity curve will go like this, the less your P&L will jump up and down, and the more less your P&L jumps up and down, the less emotional you'll be, and the more grounded you'll be. That's why I say don't even look at your P&L when you trade. But that's what Kane is doing. This is actually a perfect example. Go ahead, Kane. I just wanted to interject.
Yeah, thank you. Thank you for that. I don't know why this screen won't go away. That's unfortunate. Okay, so I'll just move. Let me move this back. Sorry. We'll do this. Let's move this one over here. Okay. No, that thing's stuck on my screen, I guess. Oh, so here's the original.
Yeah.
And then that's them combined.
Yeah.
And so you can see that made it a lot smoother across the board.
Right. Your equity curve is much. It doesn't asking questions. Yeah, and this is remember I always tell you guys that when Matt and I, when we're looking at positions, we don't look and we don't add, or we look at all of the combined programs that we have. Some, except maybe income, but for the most part, they are all utilized the same way, because again, you're using the same capital. You're not taking your account and separating it into 50 parts. I mean, you're not trading different accounts. You're using one. So and the synergy, you have synergy between them helping you out. So what happens is, for example, let's say you have 3 long positions in one account, and the stock market takes a dump and your positions go down. Okay. Well, the other one will be offsetting that. So or imagine one you're trading long and the other one you're trading shorts. They offset each other. They'll balance each other out. And that's what's really cool about that. And that's what a lot of funds do. And what a large institution does is they'll have 30, 40, 50 of these systems, and they combine them together. You understand? So the equity curve becomes really, really, really smooth. So tell us more, Kane.
Yep. So basically, what are the features? Like, how do you get something like this that will fill in something like this? So you match, right, the volatility. Either one, it's going to be pretty hard to find a single one that will fill in. I don't know why it does that, but that will fill in exactly your dips. Right? It'd be pretty hard to find a single program, and that's why Roger was saying hedge funds have like 30 or 40 different programs, because overall they'll average out as long as they have nice, decent equity curves. So the alternative to having 30 or 40 is adding the nice steady income, because this steady income will always be very linear, instead of this, which is like you had like a explosive growth sometimes, and then a more gentle slope, and then an explosive growth. So that linear nature will fill in these gaps over here. And you've got, I guess this is the combined one, but same thing. This looks pretty close to the combined one, right? So these linear natures are how you fill in those dips, and the ones that give you this really straight linear curves are the incomes. However, actually, most income programs that I've seen people put out, there's one huge challenge with it, and that is that when you lose, you have a tendency to lose way bigger than when you win.
Yeah,
So
there's a name for it called walking up the stairs and falling down.
oh, right. Yeah. So the reward risk ratio, or at least what I call the reward risk ratio, is terrible on those things. So I might be winning 90% of the time, but when I lose, I wipe out 7 or 8 trades worth of gains. So your progress becomes really slow, and actually you don't get this nice linear move. You get something more like a what Roger was saying, a staircase. So you move up and then you go way down, and you move up and you go way down, and you move up and you go way down. And yes, overall you have this very gentle slope moving upwards, but that's a different type of emotional roller coaster. Actually, I think that one's tougher to eat, because if your income trades are generally based on time, they're based on theta. So you do one a week or one a month or something like that. So if you can imagine that I spent the last 10 months and hey, I won all 10 trades, and then boom, in one trade, you erased 8 or 9 months of gains. And you're like, oh, I might as well just traded that first one at the very beginning of the year, and I would be in the exact same place. That can be really hard to handle emotionally. So the challenge is, how do you find an equity curve like this? And you need to be able to come up with income trades that have really favorable reward to risk ratios, 1-to-1 ideally, or as close to 1-to-1 as possible. I don't think you're really going to have realistically consistent gains, consistent wins on anything higher than a 1-to-1 reward risk ratio.
Right.
So the way that we have to do this is through structuring of the options, because a simple call or simple put won't even give you income, because unless you're selling them naked, but which you don't want to do. But in order to cover yourself, it's always going to be some type of spread. So how do we manipulate those strikes and the distances of those strikes and the combination of those strikes in order to give you that really favorable reward to risk ratio and still hit at a 80, 90+% win rate? And I can go and I'm not prepared to go into more detail than that, because I was only
that's
going
okay.
for 15
that's all
minutes.
right. No, that is okay. That is perfectly fine. Next time, and maybe you can come back here on, let's see, today's Wednesday, maybe on Friday, and would that give you enough time to take us to the next step, to show us, like, give us a little idea of what you're talking about?
Yeah, I can do that.
Perfect. All right. Keith, yeah, if you're still here, send me an email. Let me know what programs you're in. I'm curious, Keith. And Bog, let me know about your experience in the weekly cash flow. Okay, send me an email, roger@rogerscott.com. I have had 4 losers out of the last 16 trades. I want to see how many we've had. Got to make sure you follow the rules. Send me an email. This is not the place for it, but send me an email. I want to take a look. So anyway, guys, Matt will do seasonality right now. And then I will be here at 2:30, and I'll have a class, and I will talk about seasonality. I was confusing 1 o'clock with 2:30 because I'm usually on at 1 o'clock. So I will be on at 2:30, an hour and 37 minutes from now. Kane, thank you for being here. Thank you very, very much for being here. I really appreciate it. And folks, please take notes and listen to what Kane says. And Kane, we will see you Friday, and we'll do part 3. Okay, how does that sound?
Sounds good.
All right, you guys send me an email. Okay, both of the people who just Fog and it was one more person. Let me know, and I'll talk to you guys later. Matt, do your thing, and I'll see you guys in an hour and a half. I'll give you some very cool seasonality on a stock that's popping right now as we're talking.
All right. Okay. Here is seasonality for your sectors, just alongside right here. The sheet is frozen, so I'll try to fill the time in, but I can't move it. Oh, there it goes. Jumped all the way over there. All right, here's the long side for your sectors. These looked a lot stronger yesterday. They don't look bad, but again, this is a very choppy system. So we tend, it's going to have some fluctuations. So you really need to put the context of the 2-week hold on top of it. Here's the short side. Not a lot going on. Here's 10-day hold. Some really strong numbers for quite a bit of the sectors. I'd say all of them are acceptable, but a few of them are exceptional. Healthcare, really good numbers, 82% accuracy, over 2 profit factor. XLU is pretty great. XLP and industrials. So I don't know why I switched there. Healthcare, utilities, consumer staples, and industrials all looking really, really strong. You do have a little weakness in financials and energy. Note the profit factor. That's what more concerning than the accuracy to me. Hmm. Overall, some pretty strong numbers. On the long side, your number is 280. That's pretty small. It's less than average, especially with the 10-day hold that we've been having, which is very strong. Short side has 8. Day hold, this is really our bread and butter. 181 to 70, 362 to 60. If I had to give it a letter grade, that's like a B minus. It's been an A. Does seem to be in a little bit of a lull. And if your break even or profit for the next 2 weeks, 453 out of 550, or 452 really. That's pretty good. Let's see if I still have the graphical picture. I do not. But I've been going over it quite a bit. It's really strong, and it's a little choppy until the end of this week, and then the rest of November is very strong across the board in almost all the sectors. And I'll show that again tomorrow. I don't have that sheet up right now, but that is what you got. I don't have any individual picks. If you want the individual pick or seasonality today, you're going to have to go to this link right here. And that's all I got. We'll be there at 2 o'clock, 2:30. I think the room will open at 1:30. You want to go there and hang out. I'll see you all then. If not, I'll see you all tomorrow. Have a great day.